Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, November 14th, 2018, about 3:50 p.m. We have about 10 minutes left in the session. I wanted you to see where the prices were so you can compare that to where the settlement's going to be today. I can tell you the metals are trading a bit higher than where they're going to settle. You were down a lot more than this just a few minutes ago in the Dow. You were down back 300 points when I began recording the agriculture update. So you're getting a bit of a pop in the market, but I don't know if it's going to last at all. Here's been the dilemma for this market. So far, this is no more than a dead cat bounce in the energies. I realize you got up to 57.37, but for the session, after 12 sessions down in a row, you're up 30 points in WTI. I don't think that's great. Here's the powerhouse, natural gas. I was walking through the building today and traders were grabbing me asking about the nat gas, and I said it's a money play the way this is. First off, one of the popular spreads in energies was nat gas versus our other energies, be it the crude oil markets or some of the others that traders play on. The unwinding, the break, the sharpness, we're in a repricing cycle. I mean, if you don't believe me, that's fine, but that seems to be where we're at. The metals aren't in that. They've already gone through it. That doesn't mean they can't join in and go to another level down. But so far they're not, and they're getting a little benefit from the lower dollar. And of course, now you've got the Brexit deal, at least something on the table. Let's take a look at what the chart's doing. Obviously, if you look at this chart and you look at this line that I've given you, this was the close. And this is a close-only chart, not highs and lows. Is the market going to challenge that close level of 2017? And that means if it does, just think about it. You've lost everything you made this year on this whole run-up, and that happened 1, 2, 3 on traders. So we'll see what goes there. As we take a look at the Fibonacci study, you can see the high, the low. Now, this high was made in October. You dropped back down. You had your two-thirds retracement, two-thirds of the break, and now you've broken down another time. It's not a pretty looking chart. What a lot of chartists will say is if this low doesn't take out that, and if the market can regroup and take out 28.20, that will give you at least a strong possibility of that rally into year end. We'll see. It's only November 14th, plenty of time here. The market today managed to take out 27.12.75. Now, if I take out today's action, up until this, you hadn't had that pattern broken. You actually had a pattern of higher lows and higher highs. You stepped out of that today, and when you stepped out of it, the bottom fell out of the market. So while I have my own way of measuring it, and you can't get this on other chart services other than mine, what's gone on here is as soon as that number was broken, the market just stepped out of a trend. When we look at moving averages, you have no moving averages under the market. They're all above the market. So we have layers of resistance above, not below the market. We have support only at the lower Bollinger Band, which is interesting where it's at because it comes in against those lows. So if the market continues this break, that's my target. If the market decides to fight here, I wouldn't be surprised to see the 18-day average, which has been hit the past 3 days, and I call that the line in the sand, continue to act as that until the market figures out its next direction. If we take a look today, I've put on the close for December 29th right here in this gold line. Look where the market bit again and it's trying to hold itself. You know, it got down through it back here. Now today it fell back to it and at least it found some support there. The NASDAQ has not at all gotten down to these lows, and as you know, if you read anything, if you're in the NASDAQ, you got to be paying attention to Apple, and it's been falling out of bed. Their business model, we don't know. Everybody's questioning now because of the failure of the last phone, and as I said, I use an iPhone, but do I want to keep spending that money for these small new changes of chips and speed? I don't know. lower low, higher high. And I just mentioned Apple. I'm a fan. I've had it since the first year it came out. It's the only smartphone I've owned. But I think we should have more value for the dollar. When you take a look at the Dow Jones, if the market drops, this gold line right below the market's the next support zone. Today you got back underneath the 200-day moving average of closes. That is not good. Traders will be talking about that as bearish in the market. You're going to hear words in the Russell about a death cross, that you're under the key average in the cash. You've been under that 200-day average a long time. You've had bear crosses at work all since back here, my friends. This was what I considered the death cross, the way that I look at it. That's the short term, I think, more important average is the 18. Some traders like the 45, the 50-day. It's everything's different. And remember, stocks trade different than futures because by nature a stock doesn't expire, whereas a futures contract does, and then you got to take in carrying costs. How does it go off the board? It's a whole different animal. But this contract at least pays attention to the cash markets, which are different than the next futures contract. You can see momentum down, bias down, under where it was last year. VIX not moving as dramatic as you'd expect with the stock market the way it is. That's the one fly in the ointment that I see. When the market crashed big back here, it didn't take out that high. Will this high be able to take out those? I don't know, but the resistance point is right back at that number. That's the upper Bollinger Band. Momentum is up. Bias is up, but you've got this pattern of a higher high, lower low. In the bond market, it's hard to want to be short bonds as people are running the safe havens, and I think that's what's been going on. This bond rally has taken the cash bonds back down around 311, 3.11. That's not 325 that the market would thought we'd be at the end of the year with strong rates. The question here is you got a lower low, a higher high. The Bollinger Bands have widened out because you're not trending. You're just going in these V patterns. Very difficult. Same thing in the 10-year notes. Very hard calls there. TLT ETF has an outside day up. I like outside days because now it tells me that if the buyers come in, they don't want to see today's lows taken out either on Thursday or Friday. That could be what I'd call a bear trap. My definition of a bear trap is on an outside day up, not taking out the low of that day for at least 2 sessions. And that's what I'll be looking at there. Target, if the market catches a bid here, on the further bid, 115.37, the upper Bollinger Band. Dollar index, overbought, hit an upside target, backing off, looking at the 18-day average as a possible downside target with resistance at the upper Bollinger Band. Remember, Brexit's a good news for what? That was a piece of good news, I think, for both the European Union and for the British pound, and both responded positively today to that. By the way, Italy went ahead with that budget, and they're just saying to the EU, come and get us. We're going to do what we're going to do. We're going to spend more than you think, more than the mandate, more than the charters, and that's it. Now what do we do there? Not us. That's the EU problem, obviously. Higher high, lower low in the euro, but you did get a bid off all that good news today. The British pound up 37 points. Notice where it stopped. Right at the 100-day average. So as you were coming up, first resistance, second resistance could be the 100-day. That's where it ended up. We'll see what happens here. Even though Ms. May's cabinet ministers appear to be behind this draft of the text agreement, and I write about it in tonight's report. I give you the highlights of what that agreement calls for. It doesn't mean it's getting through Parliament. She has one heck of a sail. I don't know what's going to happen there. I don't think today was any more than getting over a big hurdle. This could have stopped the whole thing, so that's the good news. Now the real hard stuff starts. In the Japanese yen, the last in the market's 20.5, but it's going to close at 88.32.5, and I checked. It's going to lose its embedded reading. So not the best market. If it loses that, it's got to prove tomorrow by just dropping right away that it's going to stay, that this was no more than a bounce in an overall bearish market. When you have an embedded reading, I pay all the attention. And remember, there's an edge you can get in these markets sometimes because the settlement price, and I think the currency is 215 or 230, so I look at the settlement and I already know where the slow stochastic is going to be on the close, and that changes the math of where it's at right now. Bitcoin, instead of it basing, and I thought this was a shot at a market that was showing maturity, it caved in. So we have crude oil that caved in. We have gasoline prices that have caved in, the heating oil prices. Then we had a spike up that's a whole new price range in nat gas. Bitcoin collapsing. This is not a good looking chart. Now, if it's a real breakout, tomorrow shouldn't be much of a bounce in it, and it should stay under the lower Bollinger Band, which is $400 away. So we'll see. But I'd say that this is real bad news on that chart. When we look at the Brent versus the WTI crude, once you got to this 18-day average, you seem to have stalled for a moment against that. When we look at the Brent, you still have this embedded reading. I don't see anything that's friendly on this chart. The market moved to the right-hand side of the Bollinger Band. That's what it did. You're still hugging that on the way down. If you take a look here, 5,600, you're just over the Bollinger Band here, so you're staying within it and riding those bands down with an embedded reading. That's a bearish signal still. Gasoline, it's the same thing. Natural gas, up and away, embedded reading, holding on in that market. Until it's over, it ain't over. I'll be writing about all this tonight, and I'll be giving you a lot of commentary. So if you haven't got my comments, you might want to take a look. You can call my staff, they'll get you on it. You can go to our website to sign up, or you can click right here. But I think you'll find it interesting and always full of something different. Plus, I prep you for the next day's trading. I've already written about 2/3 of it, so I've got all the different reports with the projections as to what they should be coming out between, 6:30, 7:30 in the morning, and then moving right on. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.